Oh, that'd be nice.
Did today's positive jobs number put the Fed into a box of sorts that'll make it very hard for them to get out of? And what should be the Fed's next big move be? We bring in our panel. We have Fox Business's Tracy Burns joining the party here, Chris Gersh, Altimus Capital Portfolio Manager, and Peter Schiff, Euro Pacific Capital Founder and CEO. I pull up a quote from, where's my quote? Oh, Peter Bookfar. We watch him all the time and we read his reports. Peter Bookfar said, how could the Fed, with a straight face, now keep rates at zero in the face of a very strong jobs report, Tracy, a build of 321,000? Are they now squished into a box because you have still weakness in Europe and China?
I think 1 month does not a trend make, and that's going to be their case with this. And I don't think they're still going to do anything. I agree with Peter. I think it's high time. We've talked before. I think interest rates should be higher. That would spur the housing market. But I still don't think the Fed is going to move.
Peter Schiff, does Janet Yellen have to play contortionist and squish? We actually ordered contortionist video to show what it means to really get stuck into a box. This is kind of amazing.
Oh,
this is amazing. Look
hurts.
away, look away.
That hurts. That hurts.
But there's weakness globally, and yet what appears to be strength here.
Yeah.
What do you say?
Liz, the Fed has been in a box for a long time. The jobs report isn't putting it in that box. You see, if the Fed were actually to raise rates, all the jobs would disappear because the recovery is only here as long as the Fed is propping it up. And, you know, we got 4 economic reports that came out today. The jobs number was only 1. All the other 3 were bad. The trade deficit, factory orders, and consumer credit all came out much worse than expected. In fact, most of the economic data that's been coming out has been bad. And I think the only reason the jobs number were good...
Are they forced to raise rates even if the data are very spotty, Peter? Yes or no?
No. They can't raise rates.
Cannot.
I mean, they should have raised them a long time ago. But the problem is this is a bubble. And if they raise rates, they're going to prick it. It's not a genuine recovery.
Then they're in a box.
It's just
There's
a
your
bubble.
answer, Chris. Do you agree with that?
I believe they're absolutely in the box, but it's not the U.S. or anything that's been doing it locally. It has been the fact that Kuroda shoved Yellen in the box, continuing to print that money overseas, and then Draghi taped it shut because, you know, with their deflationary concerns and his inaction, I believe that she's not only in a box, but she's taped shut until the ECB and Japan slow down what's about to happen in the first quarter of next year.
All right, so Janet Yellen needs to practice with Cirque du Soleil. We'll be watching that. Let's get to gold. You may all think that gold just plummeted over the past year, but the volatility over the past 2 weeks was important enough for us to put together this graphic. It kind of makes your head spin. Up, down, all around, right off the bat. I go to Peter Schiff first on this. How do you profit amidst the volatility of gold?
Well, first of all, gold hasn't plummeted this year. Gold is about where it began the year. It's basically unchanged. So you might think it's dropped a lot based on all the negative press, but it really hasn't gone anywhere. It went down the prior year. But I disagree with what one of the panelists just said about...
Let me just point this out. It hit a 52-week low at 1132. You are correct. Then it found support around 1180, and right now we're at 1191 per ounce.
Yeah, but that's about where it started the year. I mean, this is where it was in January. But the point is, what's really propping us up is all the money printing that's going on in Japan and all the money that they think they're going to print in Europe. That's what's propping up the dollar, and that's what's hurting gold.
Is there a trade here,
But when
Peter?
people find out that we're going to print more money... Excuse me?
Is there a trade? What should people buy if they're listening to you?
Yes, I'm getting to that. When people figure out that the U.S., the Fed, is going to print more money than Japan and Europe combined, that we're not getting ready to tighten, we're getting ready to launch QE4, that's going to light a fire under the gold trade because people are hiding out in the dollar right now, but they shouldn't. They need to go to gold.
Well,
Peter, we love you, but how long have you been singing the gold song? And to your point, if gold is exactly where it started at the beginning of the year, but if gold is exactly where it started at the beginning of the year, why should anybody bother at this point? I mean, truth is, you can find easier ways to make money that are sure bets in the equity market.
Chris, no QE4, you think?
Yeah, there is no sure bet in the equity market.
Here's a trader. No, Peter, I'm going to tell you how you trade gold. Peter, this is how you trade gold. I trade gold. All right, the VIX is down around 11, 12. You're not buying gold at that. It's a risk play right now. The strong dollar, with the yen being printed, you're right on that. But here's the thing. Volatility has to spike up, and we have to have a pullback in the S&P before we buy gold. So all the viewers, if you're playing the gold play, the VIX has to come up around 18, S&P has to come off a little bit, and the dollar strength right now, do not buy gold as long as the dollar continues to be over 120 versus the yen.
I'm not to be fair with Peter, Peter
gold.
is not a short-term trader. Peter, you're a long-term guy, correct?
Well, I want to be in gold. And as you know, Tracy said, how long I've been talking about gold since it was under $300 an ounce. And yes, we've had a couple of years where gold has gone down, but I think we're getting ready for another big leg up. I still maintain we're going to go to 5,000 and higher. And so people need to own gold, and they need to understand why. But you just don't own gold. You have to own other assets too.
Well, of course.
But Tracy's talking about a sure thing in the U.S. stock market.
I'm just saying,
18 years ago, Alan Greenspan was talking about irrational
is a little
exuberance.
safer for your 401k than gold right now.
Okay, hold on. We want everybody watching to join the debate.